Okay, willkommen. Erste Frage, sprechen alle Deutsch? Then English. Okay. That's fine. We just wanted to ask because not many people here. Welcome to our session. It's a small group here, so I'd like to encourage you all. Let's make it a conversation. So when you have any questions to our speakers today, you just feel free to raise your hand. So my name is Stefan. I'm part of SICTIC. We're the biggest angel investment club in Switzerland. We try to support Swiss startups and make sure we get funding for the great startups that are out here with the investors in our community. We have roughly 500 investors in the community. And I'm really happy to have today three amazing people here who will share their story, where they come from. We have Sascha, who runs one of the big VCs here in Switzerland, an incredible success story from the founder side, from Jan Philipp. And from SICTIC, we have one of our board members here as well. I always call him Mr. FinTech in Switzerland because he knows everything about FinTech in Switzerland, all the dirty stories as well.
Of course. That are the most interesting ones, of course.
I think some really, really great people who will share with you their story, what they've seen happening in the market, what they see from their own experience building a business in Switzerland. And like I said, whenever you have any questions, feel free to ask. It should be a valuable session for you. And you have an amazing opportunity here to hear from them. Who wants to start from the three of you?
Sascha is first.
I'm first.
Yeah, slides. So.
I have slides. And a microphone. No, because Stefan asked me if I want to make a small talk about the connection from angels and VCs. So I thought the best thing is to show this in my daily business. So through my venture capital fund, we are based here in Switzerland, in Zurich, and just to give you a short overview, I'm Sascha. I'm one of the founding partners of Equity Pitcher. I'm doing startup investment. Or I have to start like this. I founded my first company with 23 years. And it was already a small investment boutique because a friend of mine was working in a startup. Back then, you didn't say startup. Ralph for sure knows this time. This was in 2006. But it was Web 2.0, the new shit. And like it is, when the beginning of 20, your friend ask you, hey, don't you want to see where I work now? I'm in another country. And that, of course, I said, hey, yeah, I will come and join you and see what you are doing. And I found it so amazing because I made my education in a bank, in a classic bank. And everything was like corporate structure and this and there. I saw this 20, 30 guys running around like crazy looking for everything, and nothing didn't work out. And especially, of course, they were the highest pain was fundraising. And then I said, hey, I want to go to Switzerland and help young companies to find money. So that was basically my start in the entrepreneurial journey. And I did this then. It's almost 20 years back again. Most of the time I did this together with my business partner Herman. We also founded Equity Pitcher 10 years ago now. And then in the meantime, so again, most of the time I was by my own, with my own company together with Herman. We did this for several also institutional investors. And 10 years back, we decided to do this by our own again. And that was the start of Equity Pitcher. And that's our team today. So 5 years ago, we got a third partner within the company, Andrea. And so we three run this company today. And our board members, they have like a really broad experience also in angel investing, of course. Norbert is running I don't want to mention the competition.
Not a problem.
Not the start angels. And Thomas is also from beginning with us. He built up the Techno Park in Aargau. So they are very aware of this whole angel investing there also. And what we do with this team, at the end, we look around 2,000 companies a year in the meantime, from which we invest at the end between 6 and 8. So we have a huge funnel. I would assume that we have around 8 or 9 of 10 deals we want to see, we can see. It's on our table. That's we really try to build connections to universities, then especially to angel investors, other VC companies. So for us, it's important to see the potential investment cases that could fit to us. And out of these 2,000, there are, of course, a lot of more great companies, but of course, we want to invest in these companies where we can bring our value in. So at the end, it's a small number we invest in. And then this is us today. So we have 3 funds. We made 40 investments in the meantime. And our biggest asset and USP, if someone is asking after our USP, is our industry expert network. So before we founded Equity Pitcher, we called 20 people of different industries, typically CEOs or founders by itself. And we said, hey, we want to invest in an institutional base, and we want to invest agnostic. So for us, it's essential to have the know-how, the market know-how within our company, but of course we couldn't afford to hire 20 executives, so we had to set up like an advisory board. And this is basically more or less really typical angel investing, I would say it. So, or at least the angel work. So we use this board, and I will tell some words on a later stage, but we use this know-how and expertise really for the evaluation and also to help the startups growing. And in the meantime, we have like something around 140 million in assets. We invest only in the DACH region, only early growth, we call it. It's like there must be like revenues when we start to invest in, and it's really the scaling stage we are interested in. And we are very, very agnostic. So we do everything except biotech and pharma. But for everything else, with the tech angle, we are open to. And then, why can I say something of the collaboration between VCs and angels? So we have, in the meantime, more than 450 co-investors. We are invested together in our portfolio. And of course, there are a lot of angel investors, because typically the angel investors are financing the first rounds. And these companies reached more than 500 million in finance in the meantime. So we have quite a lot to do with other investors, especially also angel investors. And where we are especially proud of is that in the meantime we had almost 70 follow-on rounds, so investments after us from growth, VCs, etc. And we never had one single down round. Of course, we lost some companies. We lost 2 companies in the last 8 years since we made our first investment out of the fund. But we never had like a down round. And then we have this advisory board we use really a lot. So our investment managers are typically at least once a month with one of them in exchange to really get their know-how out of the market when we are looking at cases to invest in. And then on a later stage is that we really use this network to bring in, at the end it's sales power, what we try to bring into the companies. And sales power, not that we are helping them to do the sales, but we have a list in the meantime of 500 companies or contacts to C-level contacts, mainly here in Switzerland and Germany. And they allow us to pitch our startups in front of them. And it's always about to make the sales more easier for our startup companies. And that's really helping them. And that's what founders really like. So we have some exceptional founders, and this also helps us as a VC, of course, then to get to new deals and really start working there. And then when it comes to really the collaboration with the angel investors, it's like, so I already mentioned, we are in the seed series A spot in general, so angel investor typically invested before us, and typically it really runs out well. But of course, there are sometimes really hard examples of that it doesn't work well. So sometimes we experience that an angel investor, I don't know if you know this, Ralph, but that an angel investor can't let go, more or less, or really is into the topic that he needs to give his endless knowledge till the end of the company stage, and sometimes that's not helpful. So it's the same way if we go have a later stage investor. For example, we are invested with Bessemer Ventures out of the United States, and when they come into it, they just say what they want and expect from a finance round, how it has to look like, and it doesn't make sense if we sit there all the time and say, hey, listen, we don't want this and we want this another way, because you just risk that there will be no finance round anymore. So, and we have especially 2 cases right now where it's really hard with it's an Italian business angel billionaire, and he's I don't know the English word, torpedeon. So it's like he wants like hijacking. He wants things in the shareholder agreement what's just not possible for an institutional investor like us. It's impossible to say, yeah, we allow you that you have a veto right ongoing, you can have a multiple till X before anything is changing. And let's say the sad thing on this side is that really the founder is the victim, more or less, because he set up a finance round. It could work out really well, and you have one former business angel investor. He's blocking and destroying everything. Of course, he has enough money to finance it by its own a little bit more, but that's not the sense of why he started this journey. But it's really not a lot of what's happening in the market. Usually, our, let's say, business angel community in Switzerland is so good, so strong, and so well educated that it works out very well. This combination of angel investing, then coming in VC. For us, this is the main topic we are looking for. We want, when we invest, that companies really grow fast and grow strong. That's the necessary thing to achieve then the next finance round, to attract additional capital for the future. And I think we can really show this in our last portfolio, that this runs very, very well. And what this then means also for the collaboration with an angel investor, with us, for example, so that's some examples of our portfolio companies. And for example, with FutureWay, we invested together with SICTIC. There are a couple of companies we invested in. SICTIC already exited a couple of companies. So if we bring together our strengths, it really leads to can lead to a very successful outcome for all parties. And at the end, this should be the goal of all of us. So yeah, that was already my part. Do I have to stay here? Or?
No, I take over.
Yeah. Thank you very much. Great to hear all the fantastic work you're doing. You're like an important pillar of the Swiss ecosystem. Any questions for Sascha before we continue?
So do I read correctly? You have 20% success so far? They exit?
This you mean, or what? No, it would be nice. What is it? We had 5 exits now out of 40 investments we did, so it's like 10%. But we, of course, our, let's say, important cases are still in the portfolio, and we hope that there's an exit coming soon. But
he needs just one, which is going to rock off. Just one.
You just need one, but I mean that we can talk later in this stage, but in Switzerland, we don't have this 100x, 1000x here in general. What we have you do 10 investments, and we can show this really, really strong in our portfolio, and you can achieve it to bring 8 to 9 into the finish line in the stage we invest. So because they already have revenues, there's like a market proof, a product market fit in general, and then you bring them to the finish line. So we assume that out of this portfolio, we really bring more than 90% into an exit. But of course, there are a lot of exits we only receive money back or have like a 2 or 3x, and we don't expect that we have out of 10 investments only 1 or 2 really high flyers. But we also have some. Yeah. Yeah, it's like that's the typical thing.
He has a fund still open. He closes it if you want to have his pitch deck. Then you will see the data.
Okay.
And he found money, so it must be a good pitch deck.
Thanks.
Any other questions?
I also have one with regards to this Italian business angel billionaire that you mentioned before.
Oh, it's an Italian?
It's an Italian.
Yeah, okay.
It's an Italian.
I thought it's a German, but...
No. There's not so much emotion.
Yeah, emotion.
So what's their learning in terms of, I mean, there must be, in the shareholder agreement, he must have had some sort of rights that should have not been granted to him in the first couple of rounds, I guess. So what's the learning, or what went wrong basically when he first invested in the company that he now has this leverage over the company?
Right. The main problem is because you need 100% in this special case that agree to this finance round, and if he even would have 1%, he could block it. So, and of course you can then go to court and whatever, and there are clauses into the shareholder agreement. But I mean, if we would be the new investor, it wouldn't be our intention now to wait a year till the court decided and whatever. I mean, the company would die before. I still hope we find a solution and everything. But it's, yeah, like often.
Yep. Are you investor or startup?
No, from Swisscom Ventures.
Oh, okay. So for Swisscom Ventures, you always have to sign the shareholder agreement, then it's all okay.
Yeah.
The problem with the shareholder agreement is that you have the signature of everybody. Otherwise, a shareholder agreement is not really a good instrument anymore. And if you have two shareholder agreements, actually would never invest as Swisscom Venture or as equity pitcher. So, and that person has still the old shareholder agreement, and then it comes to an exit, and then you have two contracts, and then you have to fumble out, and then it's getting complicated, and the buyer will never buy you. That is the final thing. That's why you need everybody's going to sign it.
Another question?
Yeah, it was really interesting what you said about passing the baton from the angel to the investor. How do you, from the investor's perspective, manage that relationship? Do you approach the angel early and try to build a relationship with him?
Yeah, so we try to build a relationship to Ralph since 15 years already.
Yeah, he invites me for lunch all the time. And then,
No, it's really one of our main things is we are a lot out there, a lot of events, of course, and a lot with the universities and everywhere where you find these angel investors, and we do our own events and really try to bring together our network. So yeah, it's one of the most important things, this relationship management, I would call it. Yeah.
I will answer on that, and maybe Jan also has some insight because he is the startup founder, so he's mostly responsible, including everything else, to find the good investors. So we are early stage in it as angels, and then we're in it. And it's correct, we believe it's our baby, but especially the Swiss community is very aware of that. With the next round, as an angel investor, you don't have another 100K, 200, 300K. So you need other institutional investors who are coming in. And of course, they will be lead investors. They will set the terms. Hopefully, they let us also a little slice pie of investments if it's a really good startup. Otherwise, it's not a problem at all because every money is welcomed. And then the collaboration is mostly that maybe some of us is in the board and stays at least in the beginning in the board. And that is how the collaboration works. Actually, we are together in Kalingo in the board. I'm board observer because we represent 40% of the shareholders. And that's why we said that it would be good if also the angels are represented. But in most of the cases, we have 2-3%. Why should we be on the board with such minimal capital? But most of the angel people understand that they have to go out of the board or lower their opinion all the time or their voice all the time. That's natural. And then, now you can answer with your experiences about angels.
I was about to say, let's hear now the founder experience dealing with investors.
Yeah, well, actually, I think quite in the middle. So I had both sides. I had the
that's why you are in the middle.
And also the more professional investors. And maybe I can walk you through our journey where we started 6 years ago. So actually, we were really a build up from scratch startup. So our first funding round was basically 100% only angel investor. Actually, it was Ralph who was our first investor and gave us the platform and the opportunity to pitch our company at that point in time. And I think that the angel investors were most likely or were one of the pillars of our success, especially at the beginning, because they didn't just bring money. I mean, not too much, not millions, but still a solid base. Yeah,
Yeah, unfortunately.
No, but it was a very important.
Dream on, Jan.
All good, all good. But it was the basis to actually start the company and to start building something. But I think the most important thing is the network it brought us. So I think business angels have a pro and a con side. So the pro side is if you talk to them a lot, they will help you to get introductions, to find potential partners, to build up your network. The con side is you have to talk a lot to them. So actually, they take over a lot of time. So you need to invest many meetings.
I will comment on that.
No, but I mean it's not negative. It's just a trade-off. You have to be aware of that. Actually, they have a very intense way of of monitoring information. They want tips and ideas. They have. There also you have to learn how to filter some of these ideas and bring them into context. But overall, I mean that's exactly what you need as a founder. You have your idea, you have your business, you want to build it up, and having those sparring partners who bring all kinds of different ideas, and the fact that you have to listen to them because they are your investors, I mean, that's good. It's also self-disciplining and helping
and
you.
And part of the shareholder agreement too.
Part of the shareholder agreement.
I just 1, 2, 3, 4.
All right.
Oh. I thought it was government peeping us out.
Yeah, but then maybe talking about communication, I think that's also a very important point. And I think one of the major things I try to focus very, very deeply on is to have those quarterly investors calls and to keep the communication, especially also with the business angels up, because, and I will come to this in just a second, at the end we also had a situation where all investors had to sign for or exit to actually happen. And I think this only worked quite well. I mean, within 2 weeks, we were able to sign all contracts because I had a very close relationship to these investors and speaking regular to them, you know, getting them up to speed, sharing my ideas, and also giving them insights why things are happening. Also being honest about maybe that I'm not too happy in a certain situation, how things are working out, but trying to show why things are now going into that direction instead of just coming around with a contract and saying, hey, you need to sign this now. It's really, I think, or I always tried that things did not just happen, but I think if something happened, you were aware of something is going to come and that this is working on. So I think business angels are super important at the beginning. I mean, money-wise, but also experience-wise and introductions and building up the network. And then at a certain point in time, the company started scaling up or we started growing. So what we did really need is more money. That's where the business angel money kind of stops. I mean, you're always able to find another one, but it's not the big tickets, but you need the bigger ones. And we actually never really went into pure VC capital funds, but we did it together with corporate investors. So we had a mid-sized bank who invested into us, an international software company, and a company in the area of, no, I only know the French word, but prévoyance, so yeah.
Vorsorge.
Vorsorge, yeah. I never get the English word, retirement planning stuff.
Yeah. Financial retirement stuff, yeah.
So they invested in us, they were able to bring us more money, but I think it was a very big game changer in how things were working. Because obviously if a big one comes in, especially the corporates, they bring a lot of money. Just one player brings the same amount of money as maybe all the angel investors had before. So they kind of start defining in which direction you want to go. But there's a big difference because when they invest, you hope that you can work together and that they will actually support and start making business and not just bring the money, but actually start scaling up. And my experience was that this did not really work out. So we had these corporate investors. They have like one big management meeting. I mean, it's an international software company. The CEO says, hey, that's cool. I want to invest. You do the deal. And then you try to call him and you never reach him again. And like you were just like one investment in his agenda. And then, okay, but can we do some sales? Yeah, I'll send you someone from the sales team. And then they're not, I mean, that was really a point where actually our growth story kind of tipped. It didn't work out that well. And again, we had to pivot. And this is where actually the business angels came back again, helping to build network, to support us, you know, maybe even some mid-financing who helps us getting through the desert, again, to raise some money, maybe not huge amounts, but they are always on the understanding side. And my experience was that on the corporate side, they have just one idea, you have to do it. Often it doesn't work. Yeah, and then they just drop you like a hot potato. And with those, it starts getting more difficult in when you want to do other contract effects later on because they're just gone. I mean, they don't care anymore, but they have a big stake in your company, and you can't reach them. So especially that bank, they also had some restructuring problems, but at the end, there was no one anymore at this bank I knew, but they had like 3-4% of our company, and you just couldn't call anyone. You had to write at info at, and I mean that's crazy, right? That's super weird. And the business angels, you can call anyone. So I think that's really something where we had a problem. And
but just to grab the honor of the VC,
he's still around. Yeah,
you can still call me.
Yeah, that's a big difference. If you have a corporate venture or a corporate investing, in our case, it's when management changes. Maybe you're just not important anymore. But for a VC, I mean, I have never seen a VC management change in my life. They're always because you're GP, general partner, and you want to stay, whatever happens. Huh? That's a good point. Yeah.
Yeah. However, I mean, and that maybe with respect to the end of the story, so our exit, that was the corporate partner. So it was, out of the three, it was the one corporate partner where we actually had a joint product, where we were working together, and he was then the one who actually, where we could build the case, and he had the power to take us at the end. So I think my lessons learned overall are really, I truly believe in business angels. I mean, I'm not just saying it because you're next to it and you would kick me otherwise, but no, I think...
I'm used to that.
No, but I think that is crucial in a founder's story. It really helps. It's the long-term supporters. It's intense, but it does help. And I think the second one is once having corporate investors, it's so important to build up a relationship, and that's not only just calling someone, but building a product together and really doing something together. Because if that doesn't work, you just get lost, and then it's really a serious problem. You have someone, on board, maybe even with a board seat, who doesn't care anymore. And if you can make it, if you can work together with him, it has potential to become more. But I think that's really tricky. And I remember I think you made that experience a few times, right? With corporate,
of course I did.
Investors.
Yep.
So you always told me.
I was negative to corporate investors. Yes. Yeah. Still am, actually. Maybe I take a point out of what you said. I don't want to justify, but angels in general, of course, they invest. It's for them maybe also substantial investments. It's not big for the startup pathway, but it's important. And yes, in tendency, some of us have like the wish to be strategically important to the startup. And I would like to take this point. And I think you did that super well. In one side, you listened to us, and I was never one who was coming to you and take your. I said, if you have a problem, you can come to me, and you get a list of points and networks, whatever you want, and you did that. That is very important for the startup too. That he not only has Sascha in his board, he has also a group of people maybe with extra knowledge. Confront them, and then of course avoid those who to take your time coming every time in your office. To talk with you. I mean, as an investor, don't do that. Huh? And as a startup, tell the people, hey, I have to do work. Huh? I have so many balls to juggle around. But strategically, it's my very important lesson. I don't want to influence a startup. And I would like to ask you too, Sascha, what's your strategic impact? I mean, if you have an institutional investor on board, you think, or you should, or you expect maybe that this person is also staying. Are you really willing and want to, or with 100% eagerness to do? I know the answer actually, because we're together in the board. But is that really that strategically you want to involve yourself totally and steer the company, even though you have a big, together with the other VCs, you may have the majority at that time? That's also for you interesting. What does the VC work? And I would also hear your opinion about that. So,
I would be interested in what you think is my answer.
I never would say that. I will say, no, it's wrong. I made some pressure on him.
No, but it's like, of course, we are really eager to help the company. It's like this. But we made a different model, so we are to get in the board, but I'm still only the board observer.
Me too, actually. No voice.
And what we decided to do very early on, Calingo is a special case in many ways, but I would say in an average company from us, we brought in like one of our industry experts into the company. We have this in Calingo with Patrick. This would be one of these guys who's out of the business, who can really help them. And we, as equity pitcher or the VC, the main time we are mostly the lead investor also, so we always have a right of the board seat, and also can then say, hey, we give this board seat to a really external, independent expert, but we want to have the observer, because where we can really help is in the fundraising area. It's also in the sales area where we can really bring an input to the company, and that's necessary in the time of growing of companies. So I would say, assume every second board meeting is about fundraising again. So it's like
unfortunately, yes.
Unfortunately.
You know that too. Huh? Money's running out. What we do?
and there we want to bring our value in, but again, from the industry expertise, and this should be someone. It shouldn't be an investor. I had a lot of fights also with other VCs in the last years, because it's always the same. They have so structured their shareholder agreement and everything, then the right of board members, and then you have like a board of 5 within a startup company, and then it depends, it's 2 startup founders or 3, and then 2 or 3 investors. And there's really no one in it who has like this independent view, who can just say, hey, listen, just if we zoom out for a company view, it's just the best to go this way. Not the startup founder way, not the investor way, just to go this way. And if you have someone into the board who can moderate this really helps a lot. And then we made this experience for us. It's incredible value if we have this board constellation. And there we try to bring in our part.
Yeah, but I think that's a very important point. I mean, I think one mistake we really made is that our board was, we're 4 co-founders, and our board was always dominated by us 4. Mm-hmm. And obviously we're in the management of the company, and we always said, hey, we also want to be the majority in the board, because at the end it's our company, and so on and so forth. But it took a very long time until we opened the board to have more independent experts, others investors. And I think we should have done this earlier, because it's exactly the external view, someone coming to you and telling you, hey, come on, your sales are not working. I know you do a lot of stuff, but it's not working. Let's change it. And I think opening the board and having really a lot of different perspectives in it, experts, investors, people who did the game before, is the total key. I would even say in the future I would only have 1 founder in the board, no matter how many others you have, and really try to broaden up that view. Because at the end they're not going to take over. Yeah. I mean, we were always scared that they would take over a company and do whatever they want. But I mean, the founders are the management, they're the backbone. You cannot work against them, because if they leave, it's over. Just
to add on this, I'm still today not in the board of my own company. From day one, Herman and myself, we were never in the board of our own company. And in the meantime, Andrea joined the board, but she's also a big investor. And but it's like, and it never was. I can't remember one day where I said, oh, no, that was a mistake that we did this, or it never came out negative. And we live this in our own company, and I truly, of course, you can't run a company like this only with external board members, but it's, again, for us it worked. For us it worked, and it definitely works if you have a good diversification in the board. It's a good question. Yeah, I'm still really often surprised that it's still, if you come as a VC, you are the bad guy. This is in the head still. I don't, because I'm doing this so long, and so many startups working with VCs, and I would assume a lot of them have a good experience. Of course not all of them, but because the question is my pros and cons regarding VC, and the pros is, hey, most of the time we sit together in the same boat and we have the same target. That's most of the time of our relation. There's one time before we make the agreement that we have different different thoughts on how the agreement should look like. Okay, but after you made the shareholder agreement, you are in the same boat, and usually you bring it to the end together. And so for this, I don't know why this picture is still so bad, but again, we still have the picture you invest 10 times and 9 times you lose, and only one you bring it. So it's like old pictures, which in my view isn't the right one. And by the way, with the board expectation, I still feel the same. So we have a lot of times when the founders, especially in the early stage, say, no, we want to go in the board, we need to the majority. So it's like, yeah, still a lot of education necessary to get this out.
Do you have some concrete tips for founders, like what is a good way to engage with the VC, how to approach them?
Yeah, I have a good tip that a founder should always engage with other founders who already experienced this, because they can just say, hey, listen, they helped me out. We are often one of the guys who are financing you through the hard times, you know, and if you do this together, the relationship. I would say, let's bring this example. When a new company we want to invest in, and there's like a competition of investors, it's like you really want to be the investor in the startup. And usually then the VCs have like 1 or 2 shining stars and then say, hey, talk to them. They are our shining stars, and then they will tell you how great we are. And what we do, and we go to the start and say, hey, go to our homepage, you will find there 40 companies, just tell me 1 or 2 you want to talk to. I'm quite sure all of them will tell you that we have a good relation and work together. And there we always see, oh, that's cool, that I didn't hear from before. But that should be the rule, you know, the average part, because, yeah, you should really try to work with all companies good. Of course, some are more difficult, others not. We as VC are sometimes more difficult and sometimes not, but it's like, in average, it should be a good relation. And yes, for this, ask other founders would be my saying.
Any questions from the audience?
Jan, as founder, are you happy with the percentage equity that you have at the end of the day, after the VCs and the angels come in?
Yeah.
And actually, are you also happy with the degree of control, not technical or legal control, but practical control over you have of the company?
Yeah, I mean, maybe starting with the control, I think there's always the theoretical control you have, and then there's the practical real-life control you have. And what I experience is, I mean, if you're the founder and the CEO, and you're doing a good job, and you talk to your investors, you might only have 5% of the company, but you're in control. I mean, because they will, that's just how it works. You're too important, you're too crucial, and if you talk to everyone, you can, I think there's no need to have more. I think the other problem is about how much equity you really have in reality. In our case, it was at the end a situation where things were not working out from an economic point of view very well anymore, because obviously the more investors you get, the smaller your own percentage becomes. It becomes smaller and smaller, and then at a certain point there's a question, okay, do you want to do another financing round, which will actually reduce your equity even more? It also means that the exit has to go up even more in future so that you get the same payoff. And that's exactly, I think you said it at the beginning, in Switzerland we don't have these 100x cases. I mean, if you make a 5x, it's a good deal. I mean, we have to be realistic. Even maybe 2x is often already a good, it's already not that bad, right?
Successful investor.
Exactly, but I think that's exactly what, and that's the only criticism I have in the whole venture capital game, is at a certain point in time, this doesn't work out anymore, because your equity is so small that you say, okay, now we have to go from a 2x to a 10x, so that is, from a founder, it's still worth doing all the work. Yeah, and I think that's, I would even say, one of the major problems in the Swiss market, the economic compensation on the equity side, going over the rounds.
But I also can make an add-on. The most of the companies over time need too much money, too long, also exit possibilities, not looking for, and then you have the situation. But if you have a rock star company, I mean, then none of these problems happens, huh? So you're the founder and your team, and you're doing a very well job. I mean, nobody will doubt. So it's always, if it goes like this or like this, it's more difficult, as he said. But if it goes like this, no problem at all. And now coming back to success, if it goes like this, everybody's happy. If it goes like this, nobody's happy. It's very simple.
It can be
so. I would not make this doubt so much. We have a lot of founders who think, oh, how much I'm diluted and blah, 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 blah. Then it's always the answer is, yeah, if you're not having a super successful business, that's why you have to think about such things. Make it successful. It's very difficult to do, but easy to say.
I would say 99% of the companies go like this or like that.
Absolutely.
It's the big use case.
Yeah.
Sascha, do you see a difference in Germany versus Switzerland?
We have just 1 minute left, right?
Okay. Yeah, I see. It's the how to say it, and be careful. The hunger of German founders is higher. You know, I think it's a cultural thing. It depends because Switzerland has so much wealth and there's a family as backup and this. If we have a couple of Berlin founders and they have this one shot. And if this one shot is running good, then it can change their life. And you feel that they would never accept an exit for 2x if they would see the possibility to go for a 10x. And a Swiss founder, my experience is he always takes the 2x because it's a success. I made a company successful, and that's good, and I will have a good life. That's the big difference we see.
Good. So we're out of time. Thank you very much, everyone. I hope you enjoyed the session. And yeah, try to grab the guys in case you still have any additional questions. Thanks a lot also to our panel here. It's been really insightful. Fantastic to hear all your different stories.
Thank you.
And
Thank you.
Enjoy the conference.